Hi, welcome back. You're watching Trading Hour. Over to Manisha now, who joins in to talk about what's happening in the commodity space. And today, the focus is on metals. Hi, Manisha. Morning.
Morning, Samara. Thank you for that. Well, yes, we have seen a slight rebound in metal prices today after that sell-off that the New York session saw yesterday. Well, the rebound comes in after we do understand that the Chinese power shortages has led to a decline in production of many of these metals there. But China, in the meanwhile, is also putting for investment when it comes to grid. And that clearly would mean that there is demand going forward coming in for many of these metal prices. The reason you also are seeing support is because the US dollar is taking a pause from the kind of rally that we saw in the previous week. Also, the Chinese mid-autumn festival holidays are on 10th September to 12th of September. So ahead of that, there is some buying that you've seen in many of these metals. If you look at the copper prices, those are off its 6-week lows that we saw the prices trading in yesterday itself. The Chinese copper inventories are at a record low of around 142,000 tons. That has been supportive. And Peru, which is the biggest copper producer, also reports that their production for copper is down by more than 6% for the month of July and August. So that means there is less supply, and the premium on spot for copper demand continues to increase as well. That is the case that you've seen for aluminum also. Yesterday, we were trading at a 17-month lows, but we have seen some buying onto this one as well. I also want to put on table the ANZ report that talks about the Chinese copper and aluminum demand, which says that last year, the copper demand was up by nearly 2.2%. For this year, the expectations are of an increase of 3.6%, and 2023 could see a rise of 6.5% as well. For aluminum as well, they expect the demand growth at around nearly 3.1% for this year and would continue to grow at a speed of 4% in the next year as well. So the markets are looking at lower inventories, lower supplies, even as the economic data is weak. But with the kind of fact that you are looking at lower production, not too many expansions, and expectations of higher demand by the end of this year and the next year is what perhaps has brought many of these metal prices in the positive today.